Hey folks, I got a super exciting video for you today. The number is 20%. That's how much we've grown our ETF portfolio over the last less than 6 months, since the middle of January up until this date. And I'm going to share that with you, share the results with you in this video. There's no options. There's no real leverage involved. It's relatively low risk. It's easy, less than 5 minutes a week. Okay, maybe 10 minutes a week if you really are slow with it. It's easy. Anybody can do this, and I'm going to share it with you in this video. Let's go. Hello everybody, it is Jeremy Whaley from Trade Maestro. It's wonderful to be with you, and this is a video I'm super excited to share with you. I'm not really going to teach a whole lot in this video. Instead, I'm pulling the curtain back and I'm going to show you some results, some real world results that we've been getting on a couple of things that we've been doing together. Now, you may remember several months ago, if you've been around the channel very long, you may remember several months ago that I put out a 3-day challenge. Let me see if I can pull it up for you here. It looked like this right here. It was called Raging Profits with ETFs. And I did it as a series of live streams that I did here on YouTube. And we did it several times actually. And in that video series, I shared with you 2 portfolio models. One is a portfolio model where you can manage your portfolio with just 5 ETFs. And of course, those ETFs rotate, they change, but you're picking the 5 ETFs at that time, following the model. And then the other one is using SPY. I actually did another video on that earlier this year on how you can beat the S&P by 3 times using this technique. So some people in their feedback said, well, we want to see it done. So at the beginning of this year, I decided that I would run a model portfolio and show it live. And that's what we've done every week. On Sunday nights, we get together, we do our regular profit picks that we do as part of our Trade Maestro membership. And as part of that, I have updated every week the ETF portfolio. We've placed the trades live in the session. And by placing it live, what I mean is we've set it up with the trade triggers exactly in the session. And then when the market opens, we just let it run. So it's all automated once the market opens. And then I have done weekly updates for stop adjustments and all that stuff. So I've just run the system live in front of my group every Sunday night. And I'm excited to share some results with you. So let's get over, and I'm going to share this with you and then give you some more details at the end. All right, let's get over to TradingView, and I'm going to draw your attention here to these numbers right here. What do you see? You see a total account balance 102,386, equity 104, just over 104, and the P&L is plus 16. Now, I need to explain some of these numbers for you here. We started at the beginning of the year with right around $100,000. I believe, and I should have written this number down, I think it was slightly under. I think it was like 99,878 or something like that. It might have been 100,002. I mean, it was like right there at 100,000, because this is an account that I don't really use for much stuff, just usually for setting up trades as an example. So that was the number. Started off as a $100,000 account, and that was the number. So it was right around $100,000. So when you come back and you look at this, you see that the total equity on this right now is 104, and the total P&L is 1,600. Now that may not sound like a lot. However, it's actually remarkable. The number that this works out to is 20%. And I'm going to show you here in just a minute. But first, let me go in and I'm going to show you some of the trades themselves. Okay, so let's come back over here. And I'm going to come into the account history. And this will show you where we have gone. The first trade closed out. Well, before I do that, we started this on January 21st. January 20th is when I set them up. January 21st was the first ones went active. The first one closed on February 2nd. Okay, so you can see that right here. It's February 2nd. It had a whopping $2 profit. And then the rest of these, they all kicked in. So I'm just going to kind of highlight these for you. All these trades, we had a $2 profit. We had a $500 profit, 24, 45, 64. We had a $33 loss, a $7 loss. Let's keep going. We had a $73 profit, $993 profit, $147, $218, and keep going here, 74 and a 74-cent loss. Okay. Now, those numbers may not seem like a lot, but what I haven't told you is how much capital it took to get those profits. Okay. And the answer is $20,000, less than $20,000. The way that this worked out, we're running two portfolio models here. So one of them is the ETF model. And that model, which I laid out, I taught the whole thing in the Raging Profits course. That model divides your account across 5 ETFs. And based on where they are, it allocates the money. Okay. So I'm not going to get into the details of it, but that's the general idea. So what I did when I set this up is we allocated $10,000 for that total position. And that meant that each of these 5 trades is a $2,000 allocation. So hopefully that makes sense for you. We've got 5 trades, $10,000 divided by 5 trades is $2,000 each. So when you see some of these profits at, $200, well, that's on a $2,000 position. That's 10% profit on that, and it's in a relatively short period of time. So it's actually a remarkable ROI, and I'm going to show you this actually worked out to presently is around 20% from where we began. Okay, the second model that is part of this is it's just using SPY. And the ticker that we're using for this is SPXL. This is the 3X model. And this one is, again, a $10,000 allocation. So what you're going to find if you go into the details of this and if you start running this yourself, you'll find that the SPY model, because it's a full $10,000 working, it consistently looks like it's making more money, which it technically is in terms of one position, but it's only one position. So it's diversified through SPY, which is 500 stocks overall, but it's all in one ETF. Okay, so does that make sense? Hopefully that made sense. So that's why you see some kind of small numbers. So when you look at some of these numbers and you see a $218 or $147 profit, it may not seem like a lot, but it actually, for the risk that we took and for the capital that we put at risk, it was actually very, very good. Now, the next piece I want to share with you is not the history, but it's actually the current positions. Okay, so here are the current positions. We've got a position in SPY, we got a position in gold, we got XLP, XLU, XLF, and SPXL. And here are the current positions on those. And all of those positions are now in a spot where we have adjusted the stop orders so that even if every one of these stopped out, we would still have a profit. So we're way beyond any potential loss at this point on these positions. Okay, if you can see them here, we've got one that's got an $80 profit, a $38 profit, 93, 225, 79, and just over 1,000, almost 1,100. So together, let's come back to our account balances section. Together, if we were to close all those trades with this $1,600 profit, we would have an account value of $104,000. Okay. Now, remember, I said we started with 100,000, so we got just over 104,000, and we started with just slightly under, so we'll just call it 100. That's where we began the year, and that means that we have total about a $4,000 profit. Now, $4,000 is 4% of 100,000. That's easy math. Anybody can do that. Okay. But we didn't use 100,000. That was the size of the account, but we didn't ever use that. The most we have ever used is $20,000. And I just explained that to you. We had one position that was a $10,000 position and one that was 5 $2,000 positions equaling 10,000. And so we have never used more than 20,000, which means in terms of capital at risk, what we've actually made is right at 20%. Now, how do I know that? Well, I know that because I know how to do the math, and the math is really simple. I'll draw it on the board and then I'll show it for you here. So the math looks like this. $4,000 divided by the $20,000 in capital. So that's $4,000 in profit. And the capital at risk that we used was $20,000. And if we put that into our trusty calculator, 4,000 divided by 20,000, it comes up with 20%. Okay, so 4,000 is 20%. That's where we are right now. Now you have to understand, I'm recording this video. It is the middle of May. Today is May 21st, when I'm recording this video. We placed our first trades January 21st. So this is exactly 5 months into the year. Okay. Now, in addition to it being 5 months into the year, we have had down cycles. We have made trade adjustments. We have made rotations. And these are the 5 month results. Okay. So if we continue that through the rest of the half of the year, the other half of the year, then we should be looking at around a 40. I estimated when we started that we would probably have a 30 to 50% profit at the end of the year. We're right on track for that. If we just did this again for the next 6 months, then we'd be right at 40%. So I think that's pretty good. And understanding what's in here and what goes into it, you have to say, oh, that's pretty good. Now let's talk a little bit about that and what goes into it. Again, it's all ETFs, all exchange traded funds. There's no options involved. There is no advanced strategies. We're simply buying the positions based on the signals. And you talk about the signals and you say, well, what are the signals, Jeremy? We're using my basic trend system that I've been teaching for years, just like I laid it out in Raging Profits. We're using our basic trending system, buying whenever it gives us the buy signal, getting out whenever things are rolling over and giving us the exit signal, and just simply using that and managing our risk along the way. For most of the positions, that is all the ETF positions, the main ones, there's never been a point where we had more than 1% of the account at risk. That's very manageable. If you understand anything about risk management, what I teach don't risk more than 5%. Well, we've been managing that to less than 1%. Most of the time, it's been about a half of 1%. So even if you took the loss, it wouldn't hurt you. You'd be like, I can sustain that. No big deal. In fact, I could do that 50 times and still stay in the trade 100 times. There's been a couple, because SPXL is a leveraged fund, there's a couple times when we're pushing that 5% level, but then as soon as we can, as soon as it's practical, we adjust our stop and we get to a break even. So that worst case scenario, you break even on it. And again, you saw the results. I'll pull them back up here. In the account history, out of all these trades that we've placed, so we've done 1, 2, 3, 4, 5, 6 right now that we're in, plus we did 1, 2, 3, 4, 5, 6, 7, count these up here, 8, 9, 10, 11, 12, 13. So 13 plus 6 is 19. Out of 19 trades, 1, 2, 3 of them have actually sustained a loss. Okay, so percentage win-wise, people always say, well, what's your win percentage? Well, for options, for my general regular trending trades with options, it generally is around 65 to 75%. But for these right here, it's 16 out of 19. Okay, 16 out of 19. So the win percentage on that, let's do a little math on that. 16 out of 19, our winning percentage is 84%. Okay, so that's pretty consistent with where I normally am. It's actually on the higher side of where I normally am. But you can also see the size of the loss is very manageable. 74 cents. I mean, anybody can sustain that. $7, you can sustain that. $33.48, you can sustain that. Anybody can. And I think that one was actually the full, I'm trying to remember which trade that was, but I think that one was actually stopped out at our original stop. So I think that was the maximum risk ever. What do you guys think? Exciting? Listen, if you have not learned this system, you need to learn it. You need to learn this system. Come over. I'll put a link below and get yourself signed up to just take this free 3-day challenge, Raging Profits with ETFs. Or what a lot of people are doing now, and I'm having a lot of people reach out and do this, is they're just having me mentor you through it. I've created a new apprentice program at Trade Maestro where I literally look over your shoulder and hold your hand while you go through your trades. And this strategy, this technique has become the one that more and more of my coaching clients are moving towards, because it's very, very quick. It's very easy. It's very efficient, and it's profitable. Who doesn't like that combination? You don't have to learn a lot of options. You don't have to learn a whole lot of stuff. It's just execute this basic trade. If that's something you're interested in, then obviously click the link below. Learn what it means to be an apprentice. Learn what it means to get my help for that, or at the very least, take the course. It's free. Why not? Raging Profits with ETFs. Okay. However I can help you with it, just let me know. Everybody should be doing this. Yes, you can beat the market. Yes, you can beat your fund manager. You can blow them out of the water. And yes, you can do this at home, even if you don't have any background in finance. You can have a degree in basket weaving. It doesn't matter. You don't even have to have a degree in basket weaving. I mean, you could be a high school dropout and do this. In fact, I have taught my 12 and my 14-year-old kids the basics of this. They don't know some of the money management piece, but I have taught them the basics of this system, and they can do it. Like literally anybody can do it. So what are you waiting for? There's a link below. Click, get signed up for that. Start watching those videos. Reach out if you have any questions. And if you're interested in getting some help from me and you'd be interested in being an apprentice, please reach out, fill out the application. Let's get on the phone. Let's talk. And let's take your trading to the next level. All right. Until next time, happy trading to all of you. We'll talk to you soon.